This is the most hated rally I've ever seen, and I've seen some hated rallies. 2009 was another classic. It is my view that last year, when the NASDAQ, S&P, the bond market, commodities, everything collapsed, that was the pricing in of the recession by those. And I do enormous amounts of work. We probably have 1,500 charts, plus a macro model, plus a bunch of stuff with Global Macro Investor, where we look into this. We saw from our forward-looking indicators what was going to happen. And we also then have been expecting the lagged effect of the economy to come through. We also noted that markets were somewhat forward-looking and that they would start rallying once liquidity started coming in, which is part of the everything code. We'll go a little bit through the everything code. And so that has exactly been playing out. We were buyers of Ethereum back in June, thinking that the global liquidity cycle had bottomed, and ETH was the leader of the entire cycle. That bottomed in June, did not bottom again in October, while everything else bottomed in October. I remember putting out some tweets for people talking about it's usually the bear killer month. Usually get a bear market and it usually dies in October. And that's what happened as liquidity came into the market. So that got me very constructive and bullish, first on crypto, because that's my chosen asset allocation. We'll come on to that later, because I think it's the fastest horse in the race. The race is all about debasement, which is the everything code. It's not about liquidity that a lot of people talk about on Twitter. I'm less interested in that. I'm interested in the debasement of global currency by the world's central banks. Liquidity is a factor, obviously, within all of this, and that comes up and down with the business cycle. And we'll come on to the debasement cycle later. So by January, February, I've been buying everything from NASDAQ to Microsoft to Tesla to Coinbase to KR1 in the UK to a whole bunch of these semiconductors over time, just buying all of these things on my thesis that the exponential age in technology. So I bought crypto first, then technology. Crypto is by far the biggest bet. Technology was going to be the second fastest horse. Now, what's proven out so far this year is, so if I look at Solana, which is one of my bets, it's up 170% this year. Bitcoin's up 81%, ETH's up 60%. Meanwhile, over in the exponential age in equity land, that's up 73% this year, and NASDAQ's up 45%. And we said that, the other horses to back weren't worth backing. S&P's up 18%, so the NASDAQ's done 2.5x what the S&P's done. So the thesis seems to be playing out. And I think that continues into 2026. So I still see a lot of people expecting the second bear leg lower. I don't think that's coming. Of course, we will get corrections. We'll probably get a scare along the way too, where everybody thinks the world's going to end. But I don't see anything but an ongoing forward-looking liquidity cycle and business cycle. The business cycle to me is bottoming in the next month or two, and that will start moving higher. But that phase of the business cycle is the sweet magic. When the economy starts recovering, asset prices start booming, and inflation, which is lagging, continues lower. The Fed, I think, are purposely raising rates late into the cycle because they want inflation as low as possible, so they can cut rates as low as possible when it comes to the debt refi cycle. You've all heard me talk about this around, and if you don't, go and look at the stuff on the Everything Code on YouTube or on the platform where it's in much more detail. But the debt refi cycle comes towards the back end of this year, 2024, 2025. So I think we'll see monetary printing, a cutting of rates coming over that period of time. And monetary printing will be brought forward if the banking crisis comes back again. My view is there's a potential that later this month we start to see some cracks appearing there again, and that narrative comes back. Maybe it doesn't. We'll wait and see. It's not my core thesis, but it's something that I'm observing that would bring back the money printer goes burr, or more cowbell, as I say, a bit faster. So we expect that to happen. The liquidity cycle, our Global Macro Investor weekly liquidity cycle index, again, I've written about it on Twitter. I've written in the free GMI newsletter. If you haven't signed up to that, find it on Twitter under my tweets. It comes out every Sunday. Really important research, or obviously anybody on the platform, you get it in Real Vision Pro Macro in much more depth and much more deeper conversations with myself, or in GMI if you're feeling fancy and flush with cash because it's very expensive. So the forward-looking indicators are suggesting all of this goes up from here onwards. My view is that we will see, as I said, rate cuts to come. The Fed are purposefully late because they need to get all inflation expectations crushed. The one-year break-evens are already, so that's the expectation of inflation 1 year in advance, already about 1.3%. So it's come right down. The true inflation gauge of current inflation is about 2.1% this morning. I think we break through 2% in the coming month and on our way to zero. So I think forward-looking inflation is zero. PPI is zero. PPI across Europe is negative. PPI in China is negative. PPI leads CPI. CPI is going to head lower. And of all of you going, yeah, but what about wages and what about rents and core sticky? It's always lagged. It is every single time lag. It's purposely lag, just the definition of how these things work. So we are seeing already forward-looking indicators of rents coming down. The core CPI is mainly driven by that. That's what the services inflation is. Wages are already deflating, starting to come lower, and we will see ongoing deflation from that. Core CPI, wherever it settles down at, will be amenable to rates being back what they need to be, which is at or below trend rate of GDP growth. Again, part of the everything code, which I think trend rate of GDP growth in the United States is 1.75%. So it's kind of all to play for here.
Small ebook, big impact, the wealth tree. The only 4 ways that will make you financially free forever. Download it here for free.
Early cycle, this is the spring, the macro spring. We call it the GMI spring, that quadrant where growth stocks take off, all the growthy stuff happens, inflation is falling, unemployment's falling, and growth is basing and starting to pick up. We will see that the forward-looking indicators, even the ISM, the simple stuff like the ISM new orders index, those kind of things, inventories and new orders are starting to pick up. It's all over the place. And look, the Fed know it. They're not stupid. They know that the cycle turned a long time ago. They know the forward-looking indicators, where they are. They know inflation lags. But as I said, really for them, it's to undershoot inflation. That's now my core view is they want to undershoot because it gives them the excuse to fire the bullets that they want to fire. Unemployment will rise. It won't rise as much as other cycles because structurally there are just less people in the labor force. And so there's so many retirees. When you look at aggregate total economy, it's a very different picture. So I think unemployment rises 1.5%, and inflation continues low. That's a very supportive backdrop. More cowbell, more printing to cover the interest payments on the debts that they're rolling forward according to the everything code cycle. So I remain incredibly constructive, really constructive tech. We've also got the narrative of exponential age, which is an astonishingly powerful narrative around all of these, the adoption of all of these technologies all at the same time. Everything from AI to cryptocurrency to robotics to self-driving cars, which is AI and robotics added together. Internet of Things, which is basically robotics and AI again. You can see how these all interlink, right? Genetic sciences, which is AI and big data itself, green energy, all of this stuff is all going exponential at the same time and is not going to stop for the rest of our lifetime. So get used to a pace of change of which we can't understand, but it also means that it will drive asset prices significantly. We will have booms and busts. By the rate of change of the NASDAQ, I think the NASDAQ goes a lot higher. The Everything Code gives forecasts out to 26, which I will not give out publicly. It goes a lot higher. Will we end up in a bubble? Potentially. Depends how big the narrative builds, how big the meme builds around AI and exponential age technologies. So lots to play for. Early days. That wraps into crypto. Crypto is my chosen horse. It outperforms everything in this type of cycle. Like technology, it's driven by debasement of the central banks of the fiat currency market, particularly the world's reserve currency of the dollar, but all of them together really. And in addition, it's driven by the secular trend. The adoption trend of crypto is huge. It's now 425 million wallets. It keeps going up every single year. Even last year in a bear market, it grew 40%. So, and in the next coming years, we will probably get that number up to 1 billion pretty fast. So we've got a huge change to come. The ongoing adoption. We've got central bank digital currencies to come. We have, which is, whether you like it or not, still an adoption of blockchain technologies. We also have, payments rails and all of that kind of thing going on. Plus people are looking at tokenizing asset prices like bonds and stuff like that. So the financial world is moving on to blockchain, which is a core thesis of mine. In addition to that, we have now the on-ramps for the average punter, which is the ETF. That, I think, whether ARK gets the first one across on August 13th, 18th, whatever it is, that will open the floodgates. I think prices will be rising into that anyway. My forecast forwards are much higher prices anyway. Again, I'm not going to give a forecast because all of you on Twitter try and then fight me over and say, see, 3 years later, you got that wrong by whatever. It's such a waste of time. And I'm sorry that I can't help you more because you don't deserve it. Well, many of you do, but just some of you, those trolls on Twitter, you don't. And I'm a bit burned by that. So I do expect higher prices. And I think that the Bitcoin ETF starts driving that narrative. And we're seeing the regulatory landscape change. The UK is stepping forward as well. So the globalized regulation. So I'm incredibly, immensely bullish. The business cycle leans into this. The Bitcoin halving cycle to me is actually just the business cycle, and the debt refi cycle. Doesn't matter. You can still have, I don't say it's not valid, it's just happened to be the same timing. So whether they both exist independently of each other or they're both the same thing, it's irrelevant for the story, but I think it's actually the big macro cycle, the debt refi cycle coming from that. So a shit tons to play for there. I'm very excited about the space. I've been pretty public in the 3 tokens that I like, and I remain just chilling. I don't store anything on exchange. I don't do yield, even though I think yield is a great opportunity for those who want to take that risk. It's not for me. And so we just continue to wait for this to evolve and average in when I can, when I've got some cash. NFT space been really interesting as well. It's been in a ridiculous bear market and has been taking the pain. NFTs are just a lag domino of the business cycle of the ETH economy. They're the asset side. Remember, rents were the last shoe to fall in the business cycle of the regular economy. Well, NFTs are the assets. When nobody's got any gains to recycle and prices haven't been rising, then what we tend to do is we will see people liquidate for cash, and then there's no buyers around. As soon as people start making money again, they're like, look at me and my punk. It's probably behind me somewhere. And they want to start showing off. They want to start getting invested in stuff. They want to start taking more speculative bets. So that cycle returns. We've seen a bifurcation. Remember, ETH bottomed first before Bitcoin. ETH bottomed first. And what we've seen is the high-end art market in crypto bottoming first. And then we will start to see, I think probably punks bottomed, stuff like that, and will bottom, and a bunch of these things will go to zero and some will come through.